We have panic in the market today, and more specifically in the semiconductor industry. Look at this. We have Nvidia down 16%, Broadcom down over 17%, AMD down 6%, and INTC down close to around 3%. And if we look at the CNN Fear Greed Index, we are currently sitting in fear. So what's going on? Well, this headline from the New York Post summarizes it pretty well. There's a nightmare on Wall Street as tech stocks set to lose over $1 trillion over Chinese AI startup DeepSeek. So what is DeepSeek? Well, DeepSeek is a Chinese AI startup, and it's only a little over a year old, but it's already started to demonstrate breakthrough AI models that offer comparable performance to the world's best chatbots at seemingly a fraction of the cost, and this is a big deal. So how does DeepSeek compare to companies like OpenAI or Meta AI? Well, the huge point is the cost of training and developing DeepSeek's models appears to be only a fraction of what's required for OpenAI and for Meta Platform's best products. The much better efficiency of the model puts into question the need for vast expenditures of capital to acquire the latest and most powerful AI accelerators from the likes of Nvidia. And we have to keep in mind, these big 7 companies, the Mag 7, they've been spending loads of money on capital expenditures. For example, if we jump over to my ticker data profitability sheet, let's look at Microsoft and look at CapEx per share. All this data will automatically load into my spreadsheet thanks to the ticker data add-on in Google Sheets, which you can get a 7-day free trial to at the link in the description. But you can see CapEx per share has ramped up dramatically in the past decade, going from 21 cents all the way up to now $2.01. If we look at Meta, META, what we can see is the same is true, going from around 19 cents per share now all the way up to $3.27. So that's more than 15x on CapEx per share. But what about Nvidia? What we can see with Nvidia is, yes, over the past decade it's grown, but it's grown dramatically in just the last few quarters. So these companies are making massive investments. And what the market seems to be afraid of is these investments aren't going to pay off as much as expected because DeepSeek can operate their technology at a much lower cost. So when we think about the biggest companies in the world, Microsoft, Apple, Amazon, Meta, Google, and Oracle, all of them have decided they must do whatever it takes and spend whatever it takes to stay competitive in this space because they simply can't afford to get left behind. And keep in mind, Nvidia was able to earn insanely high gross margins on the most high-end data center-oriented products. For example, if we jump back over to my profitability sheet, come up here and plug in Nvidia. And just by looking at the gross profit ratio over the past decade, you can see how much it's been growing, going from about 54.9% to in 2024 all the way up to 72.72%. But again, DeepSeek has drastically reduced the capital it takes to operate. Look at this. The training cost, which was around 100 million previously, now down to 5 million. GPUs needed, 100,000, now down to 2,000. API cost, 95% cheaper. It's mind-blowing just how much more efficient DeepSeek is, and so it's no doubt why the market is currently in a frenzy. But here's what the bull case is. Less than 24 hours ago, the CEO of Microsoft tweeted, "Javon's paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity we just can't get enough of." What does this mean? Well, Javon's paradox, as we just saw described by the Microsoft CEO, is the idea that technological progress that makes a resource cheaper or more efficient to use often leads to an increase in demand for that resource. So in the case of AI, as systems become more powerful and accessible, it is likely that their use will grow significantly. This could turn AI into a commodity that's in a higher demand than ever before as more industries and individuals adopt it to perform a wider variety of tasks. And we can see this charted out. As the cost decreases, we see demand increase. And that's the bull case for these big 7 stocks, for the Mag 7. So despite the market panic, Dan Ives, a bullish tech industry analyst, said DeepSeek is a minimal threat to the AI revolution thesis and represents a buying opportunity for slumping stocks like Nvidia. He claims that at the end of the day, there is only one chip company in the world launching autonomous robotics and broader AI use cases, and that is Nvidia. So broadly speaking, the bear case for stocks like Nvidia is it could end up reducing demand for their products. But then the bull case is, due to Javon's paradox, over the long term, it could actually increase demand. Now, in the midst of all this market chaos, I think this presents a more interesting opportunity, and that's ASML, selling off about 7.3%. Keep in mind, ASML is the only company in the world building out the advanced lithography systems, which are absolutely integral to the production of various semiconductor nodes and technologies. So I think regardless of what happens with DeepSeek, whether it's bullish or bearish news for the US Mag 7, I think ASML is poised to benefit over the long term. So this is a stock I'm watching very closely. But let me know what you think of this news in the comments down below. What are the stocks you're watching? What are the stocks you're considering selling? And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Thanks so much for watching, and don't forget to like and subscribe.